let's discuss the benefits of starting an LLC. Because if you've been thinking about starting a business or formalizing your side hustle, 2025 might be the perfect time to pull the trigger on forming an LLC. And here's why. Recent changes in tax law from the big beautiful bill have made LLCs more attractive than ever for new business owners. I'm talking about permanent tax benefits, enhanced deductions, and write-offs that could save you thousands of dollars every year. By the end of this video, you'll understand exactly what an LLC is, why it's such a powerful business structure, and the specific tax strategies that can put more money back in your pocket. But here's what most people don't realize. There's actually a strategic sequence to maximizing these benefits, and if you get the timing wrong, you could be leaving serious money on the table. I'll reveal exactly what that sequence is in just a few minutes. So grab a coffee, hit that subscribe button, and let's dive into the world of smart tax strategy for LLC owners. Starting with chapter number 1, the LLC foundation and its tax advantages. But really quick before I move on, if we haven't met yet, I'm Sean's clone, a licensed tax professional who personally researches and writes every script you see from me. And while Sean is helping people save on taxes, I'm here to share his knowledge with you. But if you have any questions, the real Sean reads every single comment and tries to respond to most. Also, what I am sharing today is educational information, not personalized tax advice. If you want to consult with a qualified tax professional who can analyze your specific situation and provide guidance tailored to your unique circumstances, then click the first link down in the description below. Chapter 1, the LLC foundation and its tax advantages. Let's start with the fundamentals. LLC stands for Limited Liability Company, and it's essentially a business structure that gives you the best of both worlds. The liability protection of a corporation with the tax flexibility of a sole proprietorship. Think of it this way. When you start an LLC, you're creating a legal shield between your personal assets and your business activities. If your business gets sued or runs into financial trouble, your personal bank accounts, your house, your car, they're all protected. That's the limited liability component. Now, here's where it gets interesting from a tax perspective, and this is something that will directly impact your bottom line. Unlike a corporation, an LLC is what we call a pass-through entity. This means the business itself doesn't pay taxes. Instead, all the profits and losses pass through directly to your personal tax return. It's like having a business that's invisible to the IRS for tax purposes, but very real when it comes to protecting your assets. So here's how this works in practice. If you're a single owner, the IRS treats your LLC as what they call a disregarded entity. Don't let that term scare you. It just means you report your business income and expenses on your personal tax return using Schedule C. If you have multiple owners, it's treated as a partnership and you'll file a separate partnership return. Now, here's where recent tax legislation has made a massive difference. And this is why 2025 is such an opportune time to start an LLC. The 20% qualified business income deduction, also known as the QBI deduction or Section 199A deduction, was previously set to expire after 2025. This created uncertainty for business planning, but with the recent legislative changes, this deduction is now permanent, which transforms how we think about business structure decisions. Let me put this in perspective with real numbers. If your LLC generates $100,000 in qualified business income, you could potentially deduct $20,000 of that income from your taxes. That's real money staying in your pocket instead of going to the government. And now that it's permanent, you can build your entire business strategy around this benefit with confidence. But here's the really exciting part, and this is where the tax strategy gets sophisticated. You can actually elect to have your LLC taxed as an S corporation or even a C corporation if it makes sense for your situation. This flexibility is one of the biggest strategic advantages of the LLC structure. Other core benefits that make LLCs attractive include asset protection that creates a corporate veil between your personal and business activities. There's enhanced credibility and professionalism. Having LLC after your business name instantly signals legitimacy to customers and vendors. You get operational simplicity without the complex corporate formalities like board meetings and shareholder resolutions. And there's multiple owner flexibility that makes it easy to bring in partners or investors down the road. Which brings me to chapter number 2, strategic tax write-offs that maximize your savings. Now let me break down the tactical strategies that can save you serious money. And I want you to pay close attention here because most new business owners only capture about 60% of their available deductions simply because they don't know what to look for. Let's start with the home office deduction, which is often the biggest one new LLC owners miss. If you work from home, you can deduct expenses related to the portion of your home used exclusively for business. There are two methods you can choose from. The simplified method gives you $5 per square foot up to 300 square feet, or you can deduct the actual percentage of home expenses based on your office size. Here's a simple calculation to show you the impact. Let's say your home office is 200 square feet. Using the simplified method, that's a $1,000 deduction right there. If you're in a 24% tax bracket, that saves you $240 in taxes. Now let's talk about vehicle expenses, which represent huge potential savings for service-based businesses. You can deduct business-related vehicle expenses using either the standard mileage rate or actual expenses. For 2025, you'll want to keep track of every business mile you drive. The standard mileage rate fluctuates, but it's typically around 70 cents per mile. Here's where this gets powerful. If you drive 10,000 business miles in a year, that could be a $7,000 deduction. Again, if you're in a 24% tax bracket, that's over $1,500 in tax savings. Moving on to equipment and technology purchases, and this is where recent legislative changes really shine. Thanks to the permanent restoration of 100% bonus depreciation, you can immediately deduct the full cost of business equipment in the year you purchase it. This includes computers, software, machinery, furniture, essentially any tangible property used in your business. Here's a concrete example of how this works. If you buy a $3,000 computer for your business, that becomes a $3,000 deduction in year one, not spread out over several years like it used to be. This change eliminates the previous phase down that was reducing these benefits and makes capital investment much more attractive for new businesses. Let me also mention business meals and entertainment, which allow you to deduct 50% of legitimate business meals. This includes meals with clients, potential customers, or business partners where you discuss business matters. The key here is documentation. Keep receipts and note who you met with and what business was discussed. Another area that's completely deductible is professional development and education expenses. Courses, conferences, books, coaching programs. If it's related to improving your business skills or staying current in your industry, it's deductible. This is one of my favorite deductions because it's an investment in yourself that also reduces your taxes. Don't overlook marketing and advertising costs either. Website development, social media advertising, business cards, and promotional materials are all deductible. In today's digital world, this category can include everything from Facebook ads to influencer partnerships. Your business insurance premiums for general liability, professional liability, and business property insurance are fully deductible business expenses that also protect your company. The same goes for professional services like legal fees, accounting fees, and business consulting. These are all necessary business expenses that are fully deductible. Now, here's something that represents another area where recent legislation has created significant advantages. Research and development expenses previously had to be capitalized and spread over 5 years. Now, with the permanent restoration of immediate R&D expensing, if your business involves any kind of innovation, product development, or process improvement, you can immediately expense these costs instead of amortizing them. This represents significant cash flow advantages for technology and innovation-focused businesses. But here's where most people make a critical mistake that costs them thousands. And it has everything to do with how they structure their business as it grows more profitable. Which brings me to chapter number 3, advanced tax strategies for maximum efficiency. Now, we're getting into the sophisticated territory that separates smart business owners from everyone else. And this is where the real money gets saved. After maximizing all your tax deductions and tax write-offs, there's an advanced strategy that can save serious money once your LLC becomes profitable: the S corporation election. Let me explain the fundamental problem with the default LLC structure first. Every dollar of profit you make is subject to self-employment tax, which is 15.3%. That's on top of your regular income tax. So if your LLC makes $100,000 in profit, you're paying $15,300 in self-employment tax before you even calculate your income tax. Now here's how the S corporation election solves this problem through a strategy called salary and distributions. When you elect S corp status, you become an employee of your own business. You pay yourself a reasonable salary for the work you do, let's say $60,000. This salary is subject to payroll taxes, which is essentially the same as self-employment tax. But here's the key insight that makes this so powerful. Any profit above your reasonable salary can be taken as a distribution, and distributions are not subject to self-employment tax. So if your business makes $100,000 in profit, you pay payroll tax on the $60,000 salary, but the remaining $40,000 distribution is only subject to income tax, not self-employment tax. Let me show you the math on this. That's a potential savings of over $6,000 per year in self-employment tax alone. Let's also talk about state tax optimization strategies, which add another layer of sophistication. Many states now offer what's called a pass-through entity tax election, or PTET. This is a sophisticated strategy that helps high-income business owners get around the federal, state, and local tax deduction limit, which was recently updated from $10,000 to $40,000, a significant improvement for business owners. Here's how this works in practice. Instead of you personally paying state income tax and being limited to the $40,000 federal deduction, your LLC pays the state tax at the business level. This payment becomes a fully deductible business expense on your federal return, effectively bypassing even the updated $40,000 limitation. For business owners in high tax states, this can result in thousands of dollars in additional federal tax savings. Now, if you are considering electing a different taxation for your LLC, then you need to pay close attention to chapter number 4, choosing your optimal tax election strategy. Here's where we separate smart business owners from everyone else, and this is the decision that can make or break your tax strategy, understanding when and how to make strategic tax elections for your LLC. This isn't just about compliance, it's about intelligent financial engineering that can dramatically impact your bottom line. Now, here's what makes the LLC so powerful. It's flexibility. But that flexibility means you need to make strategic decisions. By default, you'll be taxed as either a disregarded entity if you're solo or as a partnership with multiple owners. But you can elect to be taxed as an S corporation or C corporation, and timing this decision correctly can save you thousands. Let me break down your decision framework with real scenarios that will help you understand exactly when to make each choice. Scenario 1, starting out with the default LLC structure. When you're just beginning and making less than $40,000 in profit annually, the default structure usually makes sense. You get simplicity in filing. Just Schedule C on your personal return. Yes, you'll pay self-employment tax on all profits, but the administrative savings often outweigh the tax costs at this level. Here are the key indicators for staying with the default structure: lower profits, seasonal income, testing business viability, or when administrative complexity isn't worth the savings. Scenario 2, the S corporation sweet spot. Here's where most profitable LLCs should seriously consider the S corp election. The magic number is typically around $60,000 in annual profit, though this varies based on your specific situation. The S corp election creates a powerful tax optimization strategy through strategic salary allocation. You become an employee of your own business and must pay yourself a reasonable salary. The IRS scrutinizes this, so you can't pay yourself $20,000 when you're clearly worth $80,000 in your market. But here's the key insight that makes this so valuable. Everything above that reasonable salary becomes a distribution, which is only subject to income tax, not the 15.3% self-employment tax. Here's a real example to show you the impact. Your LLC generates $120,000 in profit. With reasonable compensation at $70,000, you save approximately $7,650 in self-employment tax on the $50,000 distribution. That's serious money that stays in your pocket. What makes the S corp election even more attractive is the permanent QBI deduction. You potentially get that 20% deduction on your business income while also saving on self-employment taxes. It's a double benefit that compounds your savings. Scenario 3. The passive LLC strategy. This scenario works when you're not materially participating in the business operations. Think rental real estate LLCs, investment partnerships, or silent partner arrangements where you're providing capital but not active management. Here's what makes this so powerful. Passive income from an LLC is not subject to the 15.3% self-employment tax at all. It's only subject to regular income tax rates. This is a massive advantage that many investors miss when they're choosing between different investment structures. Let me give you a concrete example of how this works. If your passive LLC generates $80,000 in rental income annually, that entire amount avoids self-employment tax. Compare that to an active consulting business generating the same income, where you'd pay over $12,000 in self-employment tax alone. The key determination here is material participation, which the IRS defines very specifically. You generally need to participate less than 500 hours per year and not be the primary manager to qualify for passive treatment. This makes it perfect for real estate investors, limited partners, or those with investment-focused LLCs. In addition to these three scenarios, you could elect your LLC to be taxed as a C corporation, but that election is much more advanced for new LLC owners, so I won't cover it. But if you're interested in me making a video about it, tell me in the comment section below. Now, all this should help guide you in making a decision, but it's not only about saving on taxes. Remember to consider other administrative tasks and compliance requirements when choosing to elect your LLC to be taxed differently. Also, think about the long term and where you plan to take the business in the future. And don't forget about state-specific strategic considerations either. Some states don't recognize federal S-Corp elections, creating additional complexity. Others have franchise taxes or minimum fees that impact your cost-benefit analysis. The bottom line is that the combination of permanent tax benefits, enhanced deductions, and the flexibility of the LLC structure makes 2025 an excellent time to start your LLC. But remember, tax strategy isn't one size fits all. Your specific situation, income level, business type, and growth plans all factor into the optimal approach. If you want a strategic tax plan customized for you, then consider clicking the first link in the description below to work with a licensed professional. Or if you rather keep learning, then consider watching this video coming up next or others on our channel. As always, thanks for watching, and I'll see you in the next video.